With the positive sentiment in markets accompanying the start of the year, many investors have begun to turn their attention to what happens when the quantitative easing undertaken by central banks ceases. Will inflation rear its ugly head and begin to erode returns in the future, or will there be asset price deflation? Someone with an idea of the possible permutations is Kevin Pretorius from CAD Capital.
Kevin, great to have you back in the studio.
Thanks, Warren.
We've got this big problem that the world's muddled through over the last 3 to 4 years, 3 to 5 years, if you go back to 2007 around quantitative easing. It was obviously a stopgap measure to try and kickstart the economies. There's now the possibility that as economies like the US and the UK gain traction, central banks are going to stop printing money. So I just wanted to get your perspective on exactly what happens when that printing stops, because we've seen widespread effects in the global capital markets, with emerging market bonds being a very popular place, and the South African bond portfolio has been one of those. I wanted to get your perception on what might happen when that process stops and then perhaps starts reverting or reversing.
We are not as optimistic as what you are making the world sound out to be. We still think the world has got a number of years to go before we start to see really good growth. Our view on the QE is that I don't think they're going to be able to stop it anytime soon, and when they do it, it will be a very gradual process.
So gradual that we probably won't even notice it.
Possibly, Bronwyn. It could be a case of taking little bits off at a time, perhaps stopping and perhaps starting again. We think the world is just very fragile still. So it'll be tricky when and actually how it gets done, because we'll have to see what asset prices do at that particular time, but we still think that's quite some time away.
Just to get this right, obviously the quantitative easing, the idea is that the Federal Reserve and other central banks purchase the treasuries and the government bonds issued by the treasuries in those respective countries, and that money then finds its way into private sector portfolios, which then translate into a whole range of risk assets around the world. If we look at the South African bond market and we see obviously the inclusion in the WIGB last year, to what extent do you think that money from the QE has made its way into places like South Africa, and what effect has that had on our bond yields?
It has a significant effect. The money flows have come from a lot of sort of fast money accounts, overseas hedge funds. I think they possibly would be taking advantage more of the QE in a case where they would borrow quite cheap and then use the carry trade and buy a higher yield and then hopefully earn the differential. In terms of the real money flows, that I think is actually hard investment money, and so we're expecting that kind of inflow to continue. Possibly a different view to many other people, but we're expecting real money flow to continue this year. I think
this is over and above, when you talk about real money, this is over and above the froth, those just searching for higher yield and the carry trade that you mentioned.
Correct. So at the moment there is we are having a bit of a dichotomy. I think it's almost what we call the January effect. I'm not sure if economists all wake up quite optimistic. We seem to come back and this is the year we're going to grow, and this is the year.
From the holidays.
Yes. Yeah. So everybody's quite optimistic.
We've all got to be hopeful at the start of the year, and then we get hammered down during the course of the year.
True.
And it gets worse.
It does feel like that. We seem to get a little bit of positive data, and then we just talk the recovery up very quickly until the data starts to disappoint again. So at the moment, we're having a bit of sector rotation out of bonds. We've seen the US Treasuries pop their head back above 2% again. Everyone's talking about valuations and growth, and that equities is the place to be for the moment. But again, we think that the world will have to bumble along for quite a long time. Unemployment is very high. We have output gaps in both locally and in the world are very, very high. So on that point, we're not too worried about inflation. There might be inflation, but it's not the kind of spiraling inflation. We don't think you can get spiraling inflation in an environment where there's output gaps as big as they are, both here and around the world.
So here, you're referring to both countries here, both obviously offshore and in South Africa. You don't see inflation too much as a risk?
No.
for the foreseeable future at least?
It could well trend higher. There are a number of reasons. We're having a petrol increase in the beginning of the next month at 40 cents. At the moment, spot under recovery on oil is a whole rand. So if everything stays unchanged, we could get another 60 cents on top of this 40 cents. Plus, with you're talking about with Theresa, possible increases in electricity prices. So that again puts the consumer under a lot of pressure.
And the rand, a weaker rand, you've also got to take that into account.
So a bit of imported inflation as well. But I agree with the previous speaker, it's going to be very hard to pass that through. So getting back to inflation, we will see inflation, but how much of that will be demand side inflation? I think that is the key. We don't really see core inflation rising much more. So you could have the structural inflation caused by the points that we have mentioned. But then again, coming back into the band, and I think that as long as the Reserve Bank sees that kind of a tail to their inflation, they'll be more than happy. They won't be worried about it.
So from this perspective, if I'm getting you right, what you're saying is that unless the rand really blows out, core inflation should be contained, which means interest rates set by the Reserve Bank should stay flat. I presume you're not expecting a cut in interest rates anytime soon either.
No, we're not. We think it'll be sideways for a long time.
Is this the bottom? Could you say emphatically that this is the bottom of the interest rate cycle?
No, not at all. If inflation does tend to come back and we start to see similar growth that start to disappoint again, and some of these QE measures having to be reinforced, like a number of other countries are really stepping up the printing presses, and these measures don't work, well, we're in a very difficult phase right now. We've been through these, as you say, these last couple of years. We've hopefully stopped any spread of contagion. We've hopefully stopped the fallout fears that we've been through, and so we should start to look better. But this next year is hopefully we're going to test this what we've gone through now. So we'll have to see how we go. But there's very possible if the rand improves, and we think the rand is very cheap, it's done far too much. We think the rand should come back, and if that happens and the consumer is under pressure, there's a good chance that we could possibly see one, but not for the moment.
You've indicated you think the rand is quite cheap at the moment. What's your sort of fair value for the rand at this point?
Well, before the Marikana, we were very close to the 8 level. I personally think that's a fair level. So
8 to the dollar is a fair level.
Correct, 8 to the dollar. Maybe a little bit higher now. We have had a few bad news stories, but I think the government has got a little bit of a handle on things now, and we should start to see some better stories, and hopefully, we should see the rand back at fair value, or at least where we see it.
How damaging has the bad news been? Because I think when we spoke yesterday on the phone, Kevin, you mentioned this premium that's been worked into the government bond yields now. So if you're a foreign bond portfolio manager, the rand's weakened against the dollar, but the yields have also risen on the SA govies, on the SA government bonds. So what's your sort of expectation? Will the rand, you anticipate some rand strength? Would that be accompanied with a lowering of the bond yields, the South African government bond yields at this point?
Yes, I think both offer good value. So with the rand possibly 10%, overvalued. Similar, we think bonds as well. 30, 40 basis points definitely. The yield curves in South Africa are very, very steep. We do have a lot of issuance that will be taking place, so there is a justification for us to have a steep yield curve, but we think it's possibly a little bit too steep.
Just on that side, you talk about this obviously brings into play the government deficit and what looks like an unsustainable financial path. Do you believe that the South African government is heading towards a point, not immediately, but at some point in the next few years, where it's really going to have to rein in spending?
I hope so. We have to rein in spending. There's just no ways about, there's no two ways about it, both here and the world. This is not, I always like to equate our situation with the world, because it's very important that people don't get too bared up about South Africa. Right. When we talk about corruption, when we talk about things that happen here, these are worldwide phenomena that you have to be able to, listen to and take note of. But hopefully it doesn't get too bad, but take note that this is not just a local problem.
It's not a local problem, so effectively we are going to have to, it's a worldwide, global problem. We're going to have to reduce interest rates at some time and accept the fact that money doesn't grow on trees. Right now, what we're doing to encapsulate it is kicking the can further down the road. And one day we have to face the reality, isn't that it?
That's exactly the point. No one is cutting, no one's reining in spending. Everyone's trying to grow themselves out of this problem. We've thrown all the tools we can, and we still have massive unemployment. And no one has cut any costs yet. No one has reined in spending. And we've seen what austerity does to the one or two countries that have been put through it. It is dire. Imagine here having 25% unemployment and then the government putting through a cost-cutting strategy. It is extremely painful. So yes, this is the situation that we and the rest of the world are in. It's a case of just a lot more kicking the can.
Kevin, thanks so much for enlightening us. Kevin Pretorius from CAD Capital.